There we go. Let's get the ball rolling. All right. Here we get going. Truck wreck lawyer. What kind of a name is that? Yo, Bama Rock. All right, look, all people here. Bansky, Manisfed. Fix your TV you had all day. You know what I did all day today? I did nothing. I played with my plants. What else did I do? I forget what else I did. I did a lot of nothing today, and it was fun. Philippe, Suki, Lee. Uh-oh. Mora Modelo. Best way to get to 100,000 invested. Don't know. Alrighty. Look at all these people showing up today. Hello, how are ya? Alright, let's get started. Nice. Cool beans. What do I think of MO? You don't know. 26 and rich. You have candles on your TV. Yes, I do. Alrighty. Maybe a little dingy. I think I need some more light. I think that's a possibility. More light. Uh-oh, that didn't sound good. More light. It's a little more light, not much. See what we can do. Hey, Botox Doc is here. Let's take a look at Altria. Now, we looked at Altria and we decided it's not a good fit for this week, but let's take a look again. MO. Oh, yeah. Take a look at that. It's sitting at the high of the year. DG got murdered after earnings. Uh-oh. What the hell's my book? Oh, there it is. I knew I was using it today for something. I just didn't quite remember what. Alrighty. We got a bunch of stocks to look at today. DG, that'll be first. DG, why the hell not? Yep. Alright, so Altria, MO, is at 53.43. The 54s are going for 14 cents. Nah, terribly sorry. Let's take a quick gander at, what was the next one? DG. Brian, I like your strategy, man, but you got to me on the lookout for earnings. Okay, I appreciate that. DG. Holy cow. That ought to be interesting. Let's take a gander at DG. Okay, as we can see, high of the year. I'm going to ignore this for the moment. The previous low of the year is almost at, what was that, 101, 102. The high of the year is almost at I call it 168, 169. A year ago, we're at 130. Now we're at 84. We were at 120 earlier. But let's take a gander. Jose, Walgreens, WBA. We'll take a gander at it. Not sure if it's me, but this morning's podcast is garbled when I listen to it. Sounded pretty interesting to me. Well, I didn't listen to the recording. Right. So what are we going to make of this? What is this all about? Go from 125 down to 84? And look at the volume. Holy shit. Just for the fun of it, let's check out what happened to DG today. So Dollar General had its earnings today. Now, I almost feel bad about this. You see, Simone, how are you? All right, I almost feel bad about this. Take a look. The estimating earnings, 179. 179.4. Okay, so the actual earnings were 1.7. So it's off by 1%. What's the big deal? Not 1%. 0.09. All right, 0.09. Big deal. Is that justification for that big, huge drop? Yep, earnings week can be tricky, but if you don't mind holding your stocks, okay. New room! Hey, inspire me more. Brian, big deal is now your bag holding. Well, I'm not. I didn't buy Dollar General. Okay? 30 days ago, let's go back one day. All right. This is what Dollar General chart looked like yesterday. Remember, we talked about it. We talked about Dollar General 30 days ago at 118. Bottomed out right around 114. Shot up nicely to the top at 127, but look at where she was yesterday. Okay, right there tells me this baby's coming down. So I'm not quite sure, Brian, what you're talking about holding the bag. We talked about this yesterday. So anyone who jumped into Dollar General today, I have no idea what to tell you. But it didn't make the cut this week, so it was a no. So I'm kind of glad that I didn't jump into Dollar General. But you know what? I think I might jump into it on next week. The reason being is I love it when it does something like this. Because you got a good quality company. It's been around for a while, not going anywhere. Okay? And you got people nowadays pinching pennies. So they're moving away from the big name stores and they're moving to the discount stores like the Dollar Tree, the Dollar General, Walmart. So people are relying on stores like this. So at this, in this economic time. So I don't think they're going anywhere. I think the market maker just wanted to make a little bit of money today. Okay? So let's take a quick look exactly what the market maker did. Dollar General will help gap fill. Yep. They all have them. Some partial full. Yep. Brian, just saying in general, M tanked after earnings, Intel tanked, AAP tanked, Dollar General tanked. Yeah, but did that really have anything to do with the corporation? Now, remember, the the earnings that came out were for the second quarter. We're more than halfway through the third quarter. So just because the second quarter earnings were bad, does it mean something's different going to happen this quarter? Probably not. People are still going to work. They didn't lay anyone off, not that I know of. DG. Let's look up some news for Dollar General, just for the fun of it. Walmart is a problem for Dollar General. Analysts, big reason why. Shares of Dollar General plunged 30% on Thursday after the company slashed its full whatever it was. And a declining profit. Dollar General spotted a spending trend that points towards struggling. S&P 500 and losses today. Dollar General plummets, blah, blah, blah. While all the attention's on NVIDIA, discount retailers fell on earnings. Six-year low today. Cool beans. Early call transcript. Dollar General sales scales back guidance after quarterly results fall short. Dollar General stock is crazy. I love the way they blow things out of proportion. Did they say anything at all about them cutting back employees, stopping work? Just saying, look out for earnings if you want it safe and predictable. I got you. I don't own Dollar General, but we were talking about it this week. Yes, we were. Earnings releases have been significant lately and should not be ignored. Secretariat, I'm going to agree with you. Belong at your own risk. Gotcha. What's up, James? Trading going good? Well, it's going good for me. Hey, you can do 4. Man, I haven't heard from you in a while. You were here, then all of a sudden you were gone. DG pay good dividends? I don't know, because DG was not on the list for this week. Kind of a good thing. But DG is on my list now. I love it when a company drops this much. Okay? Well, let's go back to that chart. I love when a stock drops this much, 30%. That's a nice freaking drop. Why? Because you make your money when you buy low and sell high. Might buy it now. Walgreens. Whoa. Is it going bankrupt? Interesting question. Thoughts on Tesla? Tesla doesn't do dividends, so we don't do Tesla. Sorry. Isn't dividends just for maintaining wealth and not recommended for growing wealth like Spider 4X? Fake outs. You're new here. DG short term or long. Okay, hold on a second with that DG. I want to talk to fake out for a second. Now, dividends just for maintaining wealth and not recommended for growing wealth like the S&P or the EX. Okay, interesting. There's nothing wrong with that philosophy. Now, I do dividend stocks, particularly those that have consistently increased their dividends for 20 years or more. Now, the reason I like 20 years of increased dividends, it gives me a sense of security, stability. Okay, like they know what they're doing. If you've got a company that's consistently profitable year after year after year, 20 years of profitability, well, I have no problem with that whatsoever. Now, if I take all those companies and do what's called, let's call it a marriage between, let's call it a marriage between dividend capturing and covered calls at the time of the dividend increase. All right, so by doing that, I have safely, predictably, consistently gotten 1% per week for the past 15 years. Okay, so 1% per week is over 50% per year. I've never seen the Spiders or the EX do that. But, hey, that's just me. Now, I've only started sharing this strategy since January, so not a lot of many people have heard about it. All right, DG short term. We're going to take a look at DG. Hold on a second. How much do you make off of dividends monthly? Zach, I make 1%. Okay, so I make 1% per week. Okay, so 1% per week. Let me just show you quickly, because relatively you're new here also. Now, Zach, I get 6 accounts. I share 3 of them with you guys. Okay. Current trades for 2024. Account number 1, account number 2. Now these 2 have been running since the beginning of January. This one is relatively new. It's only a couple of months old. 2 months old to be exact. We're actually in the 2nd month of that one. But look at the number here for a second. Started out in January at 117. Current balance is 142, and I've already taken out over close to $30,000. All right. The current rate of return on account number 1 is over 46%. Account number 2 up over 69%. Started out with $100,000 in cash and $100,000 margin money. Give you about $200,000 to play with. And current balance right now is at 170. All right. Now, third account side with $100 cash is currently at 131, and it's only been going for a month and a half. Okay, so when I say 1%, let's say hypothetically you have $100,000. 1% of $100,000 is $1,000 a week, or $50,000 a year. 1%. Okay. How goes a 2% dividend per year life? Okay, dude, speed to the moon. Hold on. Inspired me more. I had to leave early yesterday because I locked myself out on my balcony. Had to shimmy down it. That's funny. All right, Hawaiian Electric, they've canceled dividends for a while, and it's going to be a while before they even get back online. How goes the 2% dividend per year life? I have no idea. I get 1% per week, which is over 50% per year. ENB, Ivan, ENB, really? What are we looking at, ENB? ENB. Enbridge. Enbridge is a no. It's a monthly optional stock. Okay, which means I can only do a covered call once a month. It's only 12 times a year. The numbers just don't work. Never have, probably never will. Sorry about that, Ivan. Stocks and strings. 1% per week plus the monthly or quarterly distribution, correct? Not always. Let's go back to calendar here for a second. Let's get there and get rid of this. And let's jump on to one of these. All right. This is what we're looking at. Grappa. Jack the Javelin. How are you doing today? All right, this is looking at August. All these little green dots represent stocks that have the dividends. Okay? These dividends are just for the month of August for the companies that I like. We got KeyBank, Johnson & Johnson, 3M, UPS, Chevron, Apple, Capital One, COP, ConocoPhillips, PPG, US Steel, Citigroup, and a whole bunch of others. Good quality companies. Now, when I say 1% per week, I'm looking at this week right here. Okay? First full week in August. We get Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, and Wells Fargo. Well, good. I get my 1% there. Buy it on a Monday, get rid of it on a Friday. There's 1% there. I go for here. Oh, look at this. Apple, ConocoPhillips, PPG, US Steel, so on and so forth. I grab another 1% there. Okay, this week here, Chevron, UPS, Archer Daniels, Aflac, and grab another 1% there. Okay, so 3M, Johnson & Johnson, KeyBank, Baxter, eBay, Corning, Whirlpool, again another 1% there. So for the month of August alone, 1, 2, 3, 4 weeks, 4%. 1% of 100,000 is $1,000 a week. Okay, that's what I'm shooting for. A safe, simple, predictable, consistent 1% per week. What's my opinion on MDB? Whirlpool. We'll take a look at Whirlpool in a little bit. Now, somebody wants to take a look at... Uh-oh. Wow. I missed all these questions. What do I think of MDB? MDB. MDB. Never heard of them. Usually when I've never heard of them, usually means it's a company that's going to be a no. MDB. Alright, so MongoDB. You've got to be kidding me. Seriously? Never even heard of them. $245. Alright, well let's take a look at how. Come on, there's no dividends whatsoever. Why are we looking at it? Alright, so Alejandro, MDB's a no. Okay, I don't like those. You like NAT? What the heck is NAT? Olds Mongos. Okay. What was next? NAT. NAT. Nordic American Tank. Yeah, no. Okay, Apple user, another monthly. When I say I like companies with 20 years or more of increased dividends, did I also mention I wanted weekly options? Walgreens has given dividends for more than 20 years, having this low since the 90s. Yep, I got that one. The one member on the team, got it. Daja Harris became 49th member on the team. Okay, cool beans. Okay, you can do for Kohl's, KSS. Oh, what a bummer. Kohl's dropped down to 1977. I love 1977. I had a blast. Like Walgreens too. So do I. Now, oh, let's back up a little bit so we can take a look at everything. Alright, so here's Kohl's. First thing I always want to see, okay, always want to see is the high of the year, the low of the year. Where was it a year ago? Where is it right now? Okay, so let's take a look at those numbers. A year ago, we were at 26.29. Yep, Kohl's, the low of the year, we have a double bottom at 17.65, and that was back in October, way over there. Okay, look at this top up here. Here's our top. Way up here, 29.68. Me, us, a year, okay? Okay, now look at the last 30 days. Here we go, last 30 days. 30 days ago at 21, we topped off at 22.50. Make the drop for the year, 18.50, up, down, up, down, up, down. Okay, today's bottom was lower than yesterday's, which is lower than Monday's. And then, so Monday, Tuesday, Wednesday, Thursday, look at the lows, just going down. We're at 1977. I actually sold the 20s. I sold the 20s this week, and she's been floating right around here. Here's 20. Now, I'm into this one at 23, way the hell up here. So why did I sell the 20s? Now, Monday we were here, and it looked as if it was going down. So I said, what the hell, sell the 20s. Seesaw, yep, saw that one. Okay. What is your favorite dividend stock? Fake out. My favorite dividend stock would be Macy's this year. Sargasm 5,000. Okay, CVS. Interesting. First thing I always want to see, the high, the low. Where was it a year ago? Where is it now? What direction is it going? 57.20. The 58s are going for 25 cents. That's not good. 57.20s. The 57s are going for 90. You take the 20 cents off there, you're still walking away with 70 cents. The 57 is going to give you 1%. I like 1% on CVS for next week. And it's actually on the chart for next week. Cool beans. Alrighty. Travis, are you looking for 1% trading with margin? So actually 2%. Well, Travis. Travis was saying something. Alright, so Travis, we go back to here. Now, do you remember, Travis, I told you I share 3 accounts, okay? Account number 1 is all cash. All cash, okay? 46.1% so far. Now, I haven't calculated the last week of this week, okay? Account number 2 is margin. So this is all cash, and this is margin. Yes, the margin one will have a higher rate of return in a winning season. It will also be worse in a losing season because this is borrowed money. 100,000 cash, 100,000 borrowed money, which means I've got to pay interest on that money. Granted, yeah, it's up 70% since the beginning of the year, but it is still borrowed money, and it's a lot more risk with margin. I always tell people, don't use margin until you understand the risk and reward for it. Okay, now we have a recession every 10 years or every decade. Okay, that's just a part of the stock market. It goes up, it pulls back. It goes up, it pulls back. Every once in a while, it has to remind people what the downside is. It goes up, it goes down. Okay, it's part of the game. So, yeah. So this one's all cash. This one's margin, and you're right. 1% would be here, and this would be 2%. 1%, 2%. Okay. So yeah, you were right about that. Kind of a long way to tell you you're right, but it is what it is. All right, you're not selling the shares that you own, no. Just the call options. Absolutely correct. Blueberry, how are you today over there in Instagram world? Yeah, stock and strings. I have a consistent flow of stocks. I got a list of about 300 companies that consistently increase their dividends and have weekly options. So every week I look at new stock, fresh meat, whatever you want to call it. Chevrolet, how are you doing? Okay, so every week there's something new. Now, granted, sometimes a stock I own, I have to carry it into a next week until it hits my target. So CVS at this current moment in time is at 57.20. So the 57s go for 90 cents. So if I bought it tomorrow morning at 57.20, sold the 57s for expiration next Friday, not this Friday, but next Friday, I can get 90 cents per share. 90 cents per share on a $57 stock is over 1%. I don't like Ford myself. If it goes down a little, the options are terrible. Well, you're absolutely correct about that. Do you add your trades to the calendar as you buy? Tasha, I'm not 100% sure what you mean by that. All my trades are listed right here. So you pick any week this year, week 26. Okay? Kohl's, Macy's, Bitto, MPW, FCX, and AEO. They're all right there. Okay? Even the dates when I bought them. 624, 625. All right, back to where we were. Brian wants to look at Pfizer. Taiwan Semiconductor, huh? Pfizer, PFE, TSM. All right, what about Coca-Cola? Coca-Cola, awesome company. So you are selling covered calls, assuming you have at least 100 of each company. Absolutely. Neil, we're going to look at PFE, which is Pfizer. We'll look at that in a little bit. 100 shares of each company. Yep. LOL. Sean. What was that? Senor Mady. Sean del Dorado. Sean del Dorado. Hello, sir. The Cones. Dollar General. Stock got massacred. Big Pasta. Yes, it did. Dropped 30%. JP Morgan shorting 92 on the 8th. Okay, unrealized losses do take their toll on one's psyche. Okay. Atra. Diana Atra, never heard of it. ARTRA. Yeah, hell no. JP Morgan. JPM. Yeah, JPM's at the high of the year. Right? Why would I do JPM? Look at it. It's at the high of the year, 222. The 222s are going for 211, the 226. You make your 1%, but you're buying at the high of the year. I personally don't ever buy at the high of the year. What about Joby? Joby. What the heck is Joby, Jeremy? Joby. Why? Joby Aviation. You've got to be kidding me. All right, let's look at the dividends. How often have they been paying dividends? JOBY. There are no dividends at the time period selected. No, dude. Come on. Dividend stocks, okay, specifically dividend stocks with 20 years or more to increase dividends. I want the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders. Something on Warren Buffett's list. Some of these companies you guys are rattling off, I've never heard of them. If I've never heard of them, well, automatically going to be a no, because if they have 20 years or more of increased dividends and weekly options, I'm going to know who they are. Joby, I've never heard of them. What the hell do they even do? Joby Aviation, I'm assuming it has something to do with aviation. They don't have any dividends, which means, how do I know if they're profitable? Okay, and if they're not sharing their profits, why would I want it profitable? I'm looking for a safe, predictable, consistent 1% per week so that I can stay in my happy little retirement lifestyle. Okay, I've been working since 1973. I think I deserve to have some time off. No, we haven't checked on Macy's yet. Miss Boutique, how are you? New York, New York. I want to wake up in a city that never sleeps. And, okay, Apple. Okay, we're going to take a look at Macy's, because I like Macy's. Macy's is one of my top favorite stocks. Starbucks. Big Poss wants to look at Starbucks. Alright, we're going to take a look at Starbucks in a bit. Let's keep on rolling. Keep on rolling on down the line. Okay, so Macy's. Here we go. First thing I always want to see, the high, the low. Where was it? Where is it? What direction is it currently going? 1557. Let's zoom on into that and take a quick gander at it. Uh-oh, I missed some questions. Based on history, why not buy DG? Uh-oh. Hold on a second, Charlo. We're going to get over that one really quickly, because we went over that a little while ago. You weren't here. That was one of the first ones we looked at. Macy's. Okay, so we're on Macy's. Let's stick with Macy's. At this moment in time, here's our high, low. Here's where we are. 1570 is the current price. If I bought it tomorrow, I'll be looking at 16s. It's only going between 12 cents and 19 cents. I might get my 1% out of that. I like Macy's. I don't mind. But I already own some Macy's. Okay. I'm not too worried about that. That's me. Okay. A year ago, we're sitting at 12.29. The bottom was 10.52. That was back October, November. Topped out at 22.15. And that was the middle of March. From there, she just went sideways for quite a bit, and I hate saying sideways because stocks don't move sideways. All right, so here's the last 30 days with Macy's. Okay, we're sitting over here at 17. We jump up 17.50, drop all the way down to 14.50. Nice drop. Look at where she goes from 14.50 to 18. That's almost $4. That's a big jump. Okay, from there we gap down. Find our bottom here, shoot up, pull back to the upside. Here's where we are now. I really don't mind Macy's where it is because it just consistently has good premiums week after week after week. Okay, so Diana wants to look at Apple. Double jolly good. We'll write that one down. AAPL. So we'll look at Apple a little bit. Microsoft. MSFT. Okay, Jeremy, we already looked at Joby. Joby's going to be a no. Brian, we already looked at Altria. That's going to be a no also. Charlo, Dollar General on Friday and hold for 30 days or so, greater than a 4% in 4 weeks, and call late week. Okay, so Charlo, I kind of like your thinking, but here's a challenge you're going to run into. Okay. It's a great idea, by the way. You know, buy it here at 84. The 84s are going for 261. Well, the odds of this thing dropping more tomorrow is probably slim to none, if you think about it, because it hasn't been this low in a very, very long time. And you make your money on stocks when they're at their bottom. You aren't going to get any more bottom than today's bottom for Dollar General. But here's the thing. It's a crapshoot. because you just don't know what tomorrow is going to bring. You say, what I would look at first thing tomorrow morning, if that thing opens up higher, well then yeah, that's probably going to be the bottom right there. But you just don't know. JD. Wow, we haven't did JD in a while. But Charlo, I do like your thinking. Okay, if you buy, 4 weeks out, did you say? So, right, so you buy it at 84. You go 4 weeks out. That would be the end of September. All right, so the end of September, it's only going for 284. Plus you get that. All right, so that's at 3%. Yeah, Charlo, 4 weeks out is only giving you 3%. So you might be better with 3 weeks out. Three weeks out is giving you 3% also. 2 weeks out, what are we looking at? Next week, it's going for over 2%. The week after, 3%. The week after, 3% again. All right, so I do 2 or 3 weeks. Keep it real, Money Man. What's up, Uncle James? How are you today, sir? I am absolutely delightful. Jeremy, have you heard of Joby? Okay, I don't know how many times, Jeremy, you're going to ask me about Joby. Joby, I looked at it twice already. It's still going to be a no. Okay, Diana, Astra. Is that AstraZeneca? Astra? Yeah, it is. Can't find that symbol. Yeah, and I spelled it right. Okay, Fungus Backup wants to take a look at TSLA. Now, I'm a little curious as to why you like Tesla. Tesla's at 206. Tesla doesn't have any dividends. So normally Tesla is a waste of time for me to take a look at it. It's currently at 207. The 207 is going for $5. That's over 2% for the week. But where do you think it's going to go? Okay. Here we are 30 days ago at 235. We drop down here to 183. Okay. Jump up to 227. Oh, wow. Ooh, that was a good one. Shit. All right. So 230, and she jumped down to 206. Well, yesterday was lower than today. Could hypothetically turn around and go back up. Hey, from Moscow, Kagala, Barzosta. How you doing? All right, so let's continue. I don't do Tesla because Tesla doesn't share their dividends. Okay, so how am I going to know if they're profitable or not? Follow them every week? Follow them every month? Yeah, no thanks. I prefer companies that consistently increase their dividends and share the dividends. I'm not in a position to take a big chunk of my money, set it aside, and wait for it to grow. So if you're looking for capital appreciation, buy a stock low and get it, have it shoot to the moon. No, that's not what I do here. I'm looking for a simple, safe, hey, someone, how you doing? Simple, safe, predictable, consistent 1% per week. Now, the trading strategy I'm showing you here, okay, was created for my 9-year-old daughter back in 2008. She's like, Daddy, can you show me what you're doing? I want to do it too. Okay, so what am I going to say to my 9-year-old daughter? Sure, honey, come on, let me show you this. So the trading strategy I had to come up with had to be simple. Remember, she was only 9 years old. Safe, predictable, consistent, and no way that she could lose. Now, you like that number 5, no way to lose? Well, 9 years old, what do you think a 9-year-old's going to do if they start losing money? Well, she's going to cry, I'm going to feel like shit, Mom is going to get involved, and I'm stuck on the couch. Yeah, no thank you. Simple, safe, predictable, consistent, and no way to lose. Okay, fine. Let's come up with the rules. Rule number 1, never buy something you do not understand. If you don't know what they do, and if you can't explain it in a 10 or 15 second elevator pitch, then you shouldn't buy it. What state are you from? Which city? Just south of Boston. Okay, that's where I'm from. All right. Rule number 2. Never sell at a loss. It defeats the whole purpose of investing in the first place. Rule number 3, make sure the company is consistently profitable. And what do I mean by that? Well, the only way, there's lots of ways to figure out if a company's profitable. 1, you can read every quarterly report. 2, you can read all the annual reports. You can dive into all that crap every single day. Yeah, or you can take the shortcut and go straight to the dividends. Now, the dividends are profits. Dividends are the profits that are given back to the investors. Okay, so you have 3 different kinds of companies. One is a private company, which you and I cannot invest in. The other 2, public companies. Company A, those are the companies that take all their profits, put it back into the company for capital appreciation. So the stock price goes up higher, faster. Great plan if you have time. Okay, I'm 60, and a lot of you in the audience are also retired or getting close to retirement. Okay, I don't have the desire, nor do I have the ability to take a big chunk of my money and put it into XYZ and expect it to go up 5 or 10 years and then cash it. No thanks. The money I make on a weekly basis has to pay my weekly bills. And it does. I live a comfortable existence. Nothing opulent, nothing huge, nothing to write home about. But I'm comfortable, and I'm okay with that. Okay? So I'm looking for safe, predictable, consistent weekly cash flow. So companies that have 20 years or more of increased dividends lets me know that they're stable, lets me know that they're profitable, and lets me know that they're continuing to increase my portion of the profits every single year. Okay, that being said, I forget where I was going with this part of the conversation. Is what it is. All right, so if the company doesn't have dividends and it doesn't have 20 years of increased dividends and weekly options, I really don't want to see it. I'm trying to be as nice and polite as possible. Astra, never heard of them. Tesla, I've heard of them, but they don't have any dividends. They're not sharing their profits. I have no idea to put $206 per share and just let it sit and wait for it to go up. Sorry, I don't play that game. Besides, let's go back a little bit. Okay? All right, so a year ago, Tesla's at 249. All right? Right now, they're at 206. Hypothetically speaking, it's 52 weeks from there to here. If I average 1% per week, right, and I bought at 200 over here, okay, and I consistently made 1% every week, well, I would have more money, okay, at 2%, I mean, at at 1% per week, that's 50% per year. So if I put 100 grand into Tesla last year, 100 grand, okay, here I would have less. I would have what, 75, something like that, because we're down $40. All right, but at 1% per week, I would now be up to, my 100,000 will be up to 150. Okay, so I'm sorry, yeah. Does it happen? Well, look at this run here. This run here from 170 to 270, that's a $100 run. Well, that's a nice run. But what happens? It almost all got taken away. See, it was at 170, shoots up to 270, that's a $100 increase. Now it's back to 180. Okay, so I just lost almost all of that right there. Okay, goes up $100, pulls back 90. Now it goes back up from here to there, $50, then it pulls back 20. Yeah, no thanks. I assume once you get the high, come down, buy at the low, sell, buy, sell, buy, sell, buy, sell, buy. You can keep doing it over and over and over again. All right, let's get past that. Tesla is going to be a no for me. If you like Tesla, that's up to you. All right, Brian Spence wants to look at JD. JD. Now, JD High of the year, 36. Low of the year, 21. A year ago, at 35. Right now, we're at 26. Alrighty? Alright, so 26.49. Look at the 26.50s, 47 cents. That is a nice rate of return. That's over 1% for the week. That's what I'm looking for. So let's zoom in a little bit closer to JD. A year ago, 34.54. Bottomed out middle of January at 20.92. Topped off at 35.72, and that was in mid-May. From there, take a look at the last 30 days. Here we go, last 30 days. Okay? 30 days ago, 26.50. Drops down to 24. Shoots up to 29 for a $5 increase. That's 20%. Then from 29.50, drops down to 25.50. Okay? She's up, she's down, she's up. So no real direction here whatsoever other than, a little bit to the downside. Okay, let's take a look at seasonality. What does the stock normally? Holy shit, I got 68 questions I got to go through. Sorry, guys, see what I can do. Normally, what does this company do? Well, here's our seasonality chart. For those of you who don't know, seasonality chart, January 1st, all the way to the right. All the way to the left, all the way to the right, December 31st. It is a full year. What is it exactly? Well, the blue line represents the movement for this year. Here we are right here at the end of August. The red line is represented by 10 years worth of data. That's 2014, 2015, 16, 17, 18, all the way up until last year. How has the stock moved over the last 10 years predictably? Well, here we are right here. It looks like she's going to come down. So let's zoom into that. Yeah, you can't mistake that for anything else. Seriously. Okay, here's the blue lines. This is where we are right now, August 29th. Okay, 10 years worth of data shows it from August 29th all the way down to September 30th. So for the whole month of September, it looks like she's going to the downside. So for me personally, I'd stay away from JD. Me. What's up, Uncle James? Astra, looked at that one. Astra. Diane, yeah, I see that. Astra. I looked it up and nothing's pulling up. Let's change this back. Standard. Let's move over. ASTR. Astra Space. Okay, there it is right there. Sorry, kiddo, it's a monthly. Okay? Monthly options, no thank you. The numbers just don't pay. Do I buy puts? Not in this account, I don't. Okay, Simone, she wants to look at Alcoa. AA is Alcoa. Okay, first thing, you ready? High, low, where was it? Where is it? Where is it now? What direction is it going? 32.65 to 32.50s. 81. Nice, I like that. That's over 2%. I like that one. Alcoa. Well, let's take a look at the chart and see what the chart has to tell us. Well, a year ago, Alcoa is sitting at 29.01. Bottoms out in October at 22.97. Now, here's the top right here. A double top, as a matter of fact, at 45.48. See that? Double top. Got your profit taking. Back up. Profit taking again. Back up. Look at this. Then she shoots up. Now she's going back down. So we're sitting at 32.47 now. It looks as if she's still coming to the downside. Okay, but you have to ask yourself, do I like Alcoa at this current price? Okay, remember, always buy it as if you're going to buy it and hold on to it for a long period of time. I like Alcoa. One of the best things I like about Alcoa is take a look at the premiums. Okay? At the money, it's $1.08, which is almost 3%. One strike out of the money, it's over 2%. Two strikes out of the money, it's just a tiny bit below 2%. Three strikes out of the money, it's still over 1%. Four strikes out of the money, it's right at 1%. Well, I like premiums that are this fat, okay, consistently. But do I like Alcoa where it is. Well, here's the bottom here. She jumps up. Now she's pulling back. I don't know. Is that going to continue to go down? I'm not quite sure. But do I like Alcoa at this current price? All right, Jose, is Walgreens on Warren Buffett's list? No. Diana Cowdrick, JJ, J&J Snack Food. Can't find that one. Sorry, kiddo. Fungus, Pepsi, 172.25. Okay, here's our high, here's our low. There's where it was, this is where it is. 172.25, the 172.50s are going for not even 1%. Sorry, I like Pepsi, don't get me wrong, but it's not even 1%. Diana, Procter & Gamble. Now you're starting picking good companies, but look where the price is. Okay, that is way too close to the high. All right, that's some nice movement. Look at that, up, down, up, down, up. That was way too close to the high for me. I like Procter & Gamble too. Okay, Walgreens, WBA. I don't believe it is on Warren Buffett's list. I don't think so. We went down again today? Holy shit. Alright, well, here we are looking at Walgreens. Here's the high, 27. Here's the low, 9.25. Look at the direction we're heading. Here right now, the 930s or the 950s are going for 13. That's over 1% if you haven't bought it yet. Now, if you like Walgreens, okay, it's a little bit tough because it keeps going down. I don't like to buy it or dollar cost average down on it until it hits the final bottom. Okay, now we thought it had a bottom a whole bunch of times. Here, 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 even a couple others. But she just keeps going down, down, down. Now, it's over 8,700 stores that Walgreens has. They're in business for over 100 years. They're not going away anytime soon. Okay, there's a lot of things happening. Okay, one, the current administration not doing their job with theft, letting people walk away with no repercussions for their actions. That has a lot to do with some of these companies losing money. It's all by design. But the company is over 100 years old. I really don't think they're going anywhere. Justin, let's take a look at Marathon. Mara, M-A-R-A. M-A-R-A. All right, so Marathon, high 34, bottom 8. That's where it was. This is where it is. Here's the direction it's going. Currently at 1712 to 1750. 58. Nice. I like that number. All right, let's take a closer look. A year ago, 1211, topped off at 34. Last 30 days. Here we go. Check out, look at these last 30 days. 30 days ago, we had a high at 23. Bottomed out, it was at 1380, something like that. Shoots up, pulls back, and a little bit of high there. 1, 2, 3 down days. And then today looks like a down day, but it has a higher high and a higher low from yesterday. So today actually qualifies as an up day. Okay? Strange that it's all red and it closed lower than it opened, but it's still higher than it was yesterday. So today is an up day. Now, Marathon, if you like it, then okay. But if not, that's a horse of a different color. Okay? Now, I do own some Marathon, and I have no problem with it at the moment. JMB, how about Berkshire Hathaway? How about no? Berkshire Hathaway doesn't have dividends. Kohl's, next week's 20 are 46. Alrighty. New York Boutique, I'm good, thank you. How are you? I'm absolutely delightful. Okay, Fred Flintstone, we did GHSI last night. Last night it was a no. And tonight it's going to be a no also. On the 9th, and is $13 a share. Is that good? GHSI. Now, I'm not 100% sure why you like this so much. You keep asking me about it. All right? Last week, it was at $9. Okay, then it went 100% increase in a week. Okay, so from from last Monday to Friday, it was at $9, then it's up to 18. Profit taking Monday, Tuesday, Wednesday, and today was up 13.11. Okay, you need to ask yourself that question. This won't make my list for at least 20 years. I like 20 years of increased dividends. This thing, I don't even know if it has dividends. Why we're even talking about it is beyond me. It's a waste of my time because it's something I'm never going to look at. You can do 4. Uh-oh. Wow, I'm getting slow on answering these questions, aren't I? Oh boy, I'm way behind. Oh, you got to be kidding me. No on Tesla. Alright, MOS. AZN, yep, we already did AstraZeneca. That's a no. MOS. Mosaic. Okay, take a look at Mosaic. 30 days ago at 29.50. If the 30.50 drops down to 26, shoots up, we're sitting at 28. The 29s are going for 24 to 29, make you 1% if you like Mosaic. That's where it's the biggest one you have to wrap your head around. Number one, does it make sense? Number two, do you like Mosaic? What does Mosaic usually do this time of year? Well, this time of year, Mosaic is going towards the downside. Does that mean that's what it's going to do this year? Doesn't mean that at all. It just means last year, the year before, Mosaic went down this time of year. Okay? I like to look at that because, well, we're at that time of year again. We're coming into the end of the summer, beginning of fall. Well, do people buy what Mosaic what Mosaic makes this time of year? Okay, if not, well, then they get rid of the stocks. Thoughts on J.C. Penney? Uh-oh. Is J.C. Penney still in business? J.C. Penney has no option. That's going to be a no. Sorry, Jerry. Justin Mead, Devon Energy, DVN. We looked at this last night, didn't we? Okay, first thing, I always want to see the high, the low. Where was it? Where is it? What direction is it going? It's currently at 45. The 45 is going to 63. That's over 1.5 points for a week. Felix wants to look at BBY. Okay, we'll take a gander at BBY. All right, so Devon Energy. A year ago, we're at 50.97. Let's call it 51. We've got a double bottom at 40, 44, beginning of January and end of January. All right, here's our top, 55, and that was in the middle of April. Okay, nothing but huge down. Look at this, all the way down. Got the new bottom right there at 41. Now we're at 45. All right, let's zoom into that a little bit closer. Okay, here's your last 30 days. Last 30 days to me is important because it gives me an idea. Well, what happened last week? What can I expect next week? Okay, here's where we are this week right here. Oh, look what happened last week. It's very similar to this week, which is very similar to the week before. Okay, so it gives me an idea what are the other buyers and sellers thinking at this point in time. Well, here's where we are. Okay, up, down, up, down, up, down. Now it looks like it's going up. Tomorrow will give me a better idea. But you have to ask yourself a question. Do I like Devon Energy at 45? Because that's what it's currently going for. And the 45s are going for 63 cents a share. That's over 1% per week. I like 1% per week. Ugar. Ugar Inten. Okay. Iton? Is it Iton or Iton? I don't know. AVGO. AVGO. Alright, so AVGO. Alright, it's not even on my list, but let's take a gander at it. 160. It's going to probably tell me there's no dividends. AVGO. Because usually when you have high premiums like that, it does have dividends. Holy shit. Alright, well, let's do dividends only. And let's do all the dividends. $53, $46, $41, $36, $37. Nice. Okay, so all the way to 2010. So they have 14 years of dividends. So think of that. AVGO has 14 years of dividends. It started out with a penny, went to 2, 3, 4, 5, 10, 18, 35, 27, 33, 36, and then just right up. So the AVGO has 10 years of dividends. So ask yourself, is that enough for you? Not enough for me, but let's keep checking it out. Okay, a year ago we were at 88.09, bottomed out at 79.73, and that was the end of September last year. All right, well, here's the high right here, and that was 185.16 in the middle of June. Okay, down, up, down, up, down, and we're in a down session at the moment. Look at the last 30 days. Okay, here we are, last 30 days. 150, shoots up, pulls back. Here's our bottom at 128. From there, she shoots up to 172. Now we're coming back to the downside. AVGO might look good, not this week, but next week or the week after. So I'm putting it in for the week after next. AVGO for 2 weeks from today. All right. That being said, Devon, we looked at KHC. KHC, which is Kraft Heinz, the dividends aren't always the best. KHC. Okay, 32.26. Sorry, 35. The 35s are going for 15. Yeah, the numbers just ain't good. Look, 35.45 to 35.50 is going for 13. No, just doesn't work. Okay, you guys want to do TSM. TSM. Taiwan Semiconductor. So at 169. The 170s are going for 370, 340. Okay, that's interesting. Okay, let's take a look. There's the high, 191. There's the bottom at 88. Nice run up, pulls back, shoots up. We're sitting here at 169. Okay, so the 170s are going for 340. That's 2% if you like TSM. Well, look at the last 30 days. Ah, whew, whew. 161 30 days ago. Here's the bottom at 134. Shoots up to 175, a little over 175. Pulls back and we're sitting right here. That does not look like a good place to be. Way too close to the high. I don't like it. I would prefer it to come back down. So let's put TSM for 2 weeks from today. So it's going to take at least 2 weeks for it to get back to a certain point. All right, so TSM. TSM. There we go. All right, that being said, Devon, we looked at DLTR. Mary, how are you? DLTR. DLTR. Now, I got a couple people that want to join me on the live. Now, when I say people want to join me on the live, hey, I'm more than happy to have you. However, I have no idea who you are, have no idea where you stand, and I would prefer you to send me your phone number with a DM. I'll give you a call, we'll chat to see how well you can contribute to the conversation. All right? Now, I'm very picky. I don't like people just jumping on here and talking about, I don't know, weird shit. I just want stuff that actually complements the conversation. Okay, Brian, EQT. Now, Brian, I've never heard of EQT. It's at 33.81. EQT. EQT Corporation. Dividends. 16, 15, 13, 3, 2, 2. Yeah, I'm going to say no to this one. Okay, the reason I'm going to say no to this, look at the dividends. Right? Back in 2010, which means it's only 14 years of dividends, at 12 cents. Now, for 2010 to 2012, so for the first 3 years, they didn't go up on dividends at all. Then in 2013, they went from 12 cents per share down to 2 cents per share. Now that's going backwards. That's definite no. Okay, so 2013 it's at 2 cents. And it's 2 cents. All the way in 2018. So that's 6 years they didn't increase their dividends at all. So I'm not even going to bother looking at anything else, and I'm just going to say no thank you. Because I like increasing dividends. Sorry, Brian, EQT is going to be a no. Cisco, just making memories. All right, is that Cisco, SYY, or is that Cisco, CSCO? So you have to let me know which one it is. I thought the 1% was from the covered call, not the dividends. Oh, Bandit, you're right. The 1% is from the covered calls. So if I'm looking at this one here, 33.81 is the current stock price. If I bought it at 33.81, the closest strike price is going to be the 34. The 34 is paying a 36-cent premium for the covered call. 36 cents is more than 1% of a $33.81 stock. That's what I'm looking for. The premium is usually always higher than the dividend, and that's what I'm looking for. I'm looking for that premium consistently over 1%. That works for me. Okay, Justin, we already looked at DVN. Okay, Bandit, I think the 1% is just from wherever. Yep, capital appreciation, the premium, the dividend, either way, that's what I'm looking for. Thoughts on Altria? We just looked at Altria, Panko. Okay, we did. We looked at Altria. Altria looks nice. So why so fixed on the dividend if you don't hold on the EX date? Well, Bandit, here's the thing. Let's go back over to the dividends just to give you a quick little tutorial. You ready? There's a quick little tutorial for you. Here's the dividends on these stocks right here. This is just a sample of the stocks that I like. Now, I like the dividend kings. I like the dividend aristocrats, the dividend champions, the dividend contenders, and of course, I cheat and I look at Warren Buffett's list. Okay, those are 5 lists I look at. On those 5 lists is over 300 companies that consistently increase their dividends. Now there's 9,593 companies. We looked last week. That's what the count was last week. It changes every week. So out of the 9,600 companies, only about 300 pay dividends and increase them consistently for more than 2 decades. Okay? And they have weekly options. Those are the ones I want to look at. I take them and I put them into the calendar. So when they're in the calendar, here's the funny thing, and this is why I like dividend stocks, specific dividend stocks, because 3M is here on the 26th. 2 weeks prior to, which would be on the 12th, the stocks have a tendency to go up in value. So if I like a stock, Johnson & Johnson, I will buy it 2 weeks before the EX date. So it's here on the 27th. 2 weeks before is the week of the 12th, 13th, 14th, 15th, so on and so forth. I will wait for it to move up. I'll take my 1%, say thank you very much, and I'll see you again in 90 days. Because 3M pays a dividend every 90 days. Okay, so you have the year, 365 days, broken down to trading days, 266. Out of that 266, you have 4 quarters, January, February, and March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. October, November, December, quarter 4. Each quarter has 13 weeks. Week 1 through week 13 weeks per quarter. No trading Saturdays, Sundays, and weekends. Saturdays, Sundays, and holidays. There's about 66 trading days. So if you take 66 trading days per quarter, 13 weeks, well, each week has anywhere between 5 and 20 different companies to choose from. Each one of these companies have consistently increased their dividends. So why do I like those? Because if I look at them 2 weeks before the EX date, they have a tendency to go up in price before they get to the dividend. So hypothetically, if I'm looking at 3M, I'm going to buy it here. Okay, just go with me for a second. If I buy it here, at the money, sell at the money, the closest strike price, get my 1%, well, I make my 1% here. Now, if it's over that price, great, I'm back into cash on the 19th. If not, I keep my 1% here. I write another covered call here, and if by Friday I'm cashed out, great. If not, I keep my 1%. So I got 1%, 1%, and I do it again here. Okay, so I get 3 premiums and 1 dividend on a company that consistently increases their dividend every single year for more than 2 decades. That's what I'm looking for. Now, of course, 3M has got tossed off that list because they were a dividend king, which means they've increased their dividends for more than 5 decades, 50 years. But this year they had to cut the dividends, so they're tossed off that Christmas card list. Oh well. But I still trade them because they are a 100-year-old company and they have a nice large market cap. They have a large, large percentage of the market. All right, let's continue. We already did Altria. So why so fixed on dividend? We already did that. DVN. We already did that. AVGO. We already did that. How are you making the one? Oh, how am I making the 1%? Okay, how? Didn't I just go over that one? Hold on a second. Let's do one real quick. We're going to do a quick trade to show him exactly how we do the 1%. Now, EQT 33. All right, well, let's use EQT. I have no idea who the hell they are, but we're going to use those as an example. All right. ACDC, shared live. Thank you there. Yep, don't forget to like, share, comment, all that kind of stuff. Subscribe. Trading scalping. It could be called that. All right, you ready, Eric? Here we go. Now, EQT is the stock that we're taking a look at. I have no idea who the hell they are. I have no idea what they do. They're not on my list, but I'm just using it as an example. Okay? Now, the current stock price is $33.81. All right, so I more than likely am going to go for the 34s. They're going for 36 cents a share. That is more than 1%. So let's see how it plays out. You ready? First thing I want to do is I want to change how I buy it. Right here, where it says single, I'm going to change that to a covered call. Okay, and that's right down here. See? Covered stock. Which means I'm buying the stock and I'm selling the option against it, all in one trade. All right, so it's covered. I said I like the 34s. The 34s are right here. Okay, I like the 34s. Okay, see that little icon right there where it says buy? Lights up. I want to buy that. All right, I want to click on that one. Okay, and the order pops up. And I want to change that to a market order so it fills instantaneously. All right, and here's the trade. Are you ready? Here's the trade. Now, I'm going to change it to 100 shares because if I do 1,000 shares, some people might, get a little weird about the numbers. Okay, so just for 100 shares, here we go. First thing I always encourage everyone to do is read the order out loud before you send it in. Now, because most times you're going to lose money by hitting the wrong button. All right? It may sound elementary, it may sound childish, but I've lost plenty of money by hitting the wrong damn button. All right. By one, covered EQT. Okay, that's the weeklies, 6 September 24. That's this coming Friday. Not tomorrow, but next Friday. 34 call, that's what we talked about, 34 for EQT at the market to open to open. Why does it say to open to open? Well, because I'm opening two orders. Anytime you open an order, well, you have to close it in order to get out of it. Well, these are two orders. One, I'm buying the stock, that's one order, and two, as I'm selling a call option order. That's called a covered call, where you buy a stock, you sell somebody the rights to buy it from you for a certain price by a certain day. In this instance, it is the, the 6th of September, which is next Friday. Now, the break even, the very next line down, right? Break even is 33.09. How the hell can that be? Oh, right now the ask price is 33.81. My break even is 33.09. Well, that's quite a bit. It has to drop in order for me not to be profitable. The maximum profit, $90.50. All right, maximum. What is it costing me? $3,300. So let's do the math. For that, we're going to whip out our trusty old calculator. Clear that. Now, the maximum profit, $90.50. Okay, how do we figure out what percentage that is? Well, we take whatever we paid for it, $33.81, okay, which is $3,310. Okay, so I divide it by 33.10, and I have a return for the week, 2.73. Okay, that's 2 3/4%. Well, that's a nice trade for a week, and it's on a company. Well, I have no idea what the hell the company is, but it was just an sample. So you wanted to know how I got my 1%. It's usually from the premium. Okay, I don't want to do this one. Get out of there, get out of there, get out of there. Back to reality. Back to reality. Here we go. All right. Dawn. So what are you investing in? Well, dividend stocks, of course, my young boy. Richard Bruner, how are you today? Tasha, the calendar shows your payout dates. Do you add those in the calendar every week? Tasha, no, I do not. Okay, so how I do that is relatively quickly. Go over to my watch list. Okay, over here to the left-hand side, top left, where it says watch list. And then I'm going to click on create watch list. Okay, so now I can put in any label I want. I can put in Tasha's favorite stocks, and then I can either import them or add them one at a time. Now you can import them from a CSV file, which is a common separated variable, or you just cut and paste. Okay, I usually go to google.com and put in there Dividend Kings List 2024. Boom, then you got a list of all the Dividend Kings. You can cut and paste them all in where it says import. I can import those all into there. And once I get them imported there, get out of there, go back to there, go back to here, go back to here. Now they become part of my personal list. See that? So I come over to the calendar, go to the little gear here, and I go down to personal list, and here's my personal list. Companies that are over 100 years old, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Dividend Kings, Warren Buffett's list, my old list, high volume stocks, blah, 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 a whole bunch of different companies. Now, I missed a couple of those questions over there on YouTube, so let me zoom on in and see what kind of questions you guys have. DLT, I really like that one. Do you own any stock or do you just trade? All right, Big Pasta, I just trade. The longest I've ever held anything is 9 months. And that was Kimberly Clark. That was last year. TSM, sorry, you guys, we already did TSM. We're waiting for TSM to come back down before we jump on that. EXC is great with dividends since the 1990s. EXC. What the heck is EXC? EXC. Exelon. Yeah, but Unfortunately, Jose, ¿qué pasa, amigo? ¿Cómo está? Okay, look, it's a monthly optionable stock. What that means is I can only do a covered call once per month, 12 times a year. Okay, at this moment in time, 38, the 38 is going for 60 cents. You see it? 38, 38 is going for 60 cents. Well, that's at 2%, or a little bit less than 2%. But I've got to hold it for 3 weeks. Okay? So I got to take that 2% and drive it and divide it by 3. That's what I'm making. So 2% on a monthly basis is only 24% a year. If you're okay with 24% a year rather than 50% a year, hey, more power to you. Okay, I'm showing you 1% weekly, safely, predictably, simply, consistently. Okay, but if you want, to do that, perfect, fine, not a big deal. All right, which are the best dividends? What best dividends and growth stocks? I really couldn't tell you that one because I don't do growth stocks. TSLL, that's a no. What do I think about the gap? GPS. Now we tried to look at the gap yesterday and it wasn't coming up right. GPS. It was telling us that it had no options. And I know that's not true because I actually traded the gap before. Energy Transfer, ET. All right, well, Energy Transfer, here we go. The high, the low, where was it? Where is it? What direction is it going? Cool. 15.97. We'll be looking at the 16s. They're going for 10 cents a share, 10 to 12. That's not 1%. Sorry. Do you buy puts or just sell covered calls? I just do covered calls, that's it, on this particular channel. Now I have other channels that do different strategies, but this channel, it's one trading strategy and one trading strategy only. Sorry, ET, Energy Transfer, is not quite making it this week. 16 is not even paying 1% this week. So don't get me wrong, Energy Transfer every once in a while has good premiums, every once in a while it doesn't. So this is one of those weeks where it's going to be a no for this week. 92 questions. Damn. Pfizer. We're going to look at Pfizer. We tried to look at Gap. That didn't work. Save to invest. Hey, what's happening? See, somebody wants to look at Citigroup. Citigroup. High, low. Where was it? Where is it? What direction is it going? Cool. 62.35. The 62s are going for 78. Yeah, that's not going to work. Okay, the reason why it's not going to work is I'm losing 35 cents right off the top. You take 35 cents off of that and you're not getting your 1%. So Citigroup this week is going to be no. Thoughts on MSOX? MSOX is going to be a no. Double bottom is sometimes good. Jerry, J Trader, yup. What's the problem? Mark, right. They have more than just 8,700 stores. Yeah, Andre, you did a little bit of research, but from the very short amount of research that I did, Walgreens had 8,700 stores, now getting rid of 25% of them. But you're probably right, they probably do. Mark, shrinkage. I have no idea what you're talking about on shrinkage. Do I use OTC? No. Or can you use OTC? No. Isn't that over-the-counter shit? Yeah, no. Sorry. I remember. Cool. They are in many healthcare and beauty industries. Walgreens. Yep, probably. James, did you know GPS is now Gap? No, Felix, I didn't know that. GAP. Yeah, because it was always GPS. Crazy, I remember it at $3. Alrighty then. Andre, I think they will close the trouble stores and go up crazy. Yeah, probably. TJX. TJX. What the heck is TJX? TJX. You look so rich. I should definitely take advice from you. Well, terribly sorry, user 62, 31, 18, 93, 69, 54. I don't give advice. Okay? I just look at the numbers. I just say, Gap. Okay, great. Well, here's the last price, here's the bid, here's the ask, the open, the high, the low, the close, the volume. Okay, this is what the current strikes prices are for the covered calls. Okay, here's the calls, here's the puts, here's the chart, here's the high, here's the low, here's the direction it's currently going, this is where it's currently at. Then I just give you my interpretation. It's not advice at all. Right? So a year ago, we're at 1088. The top was 3062. The last 30 days, okay, so here's the last 30 days. 30 days ago, 2150, jumps up to 2450, drops back down below 20, shoots on up to 25. That is a 25% increase. From the bottom 3 weeks ago to last Friday, that's a 25% increase. Well, yeah, we're going to have down. Look at this, 1, 2, 3, 4. 4 days to the downside. Yep, this thing's still coming down. It looks like maybe next week. Alright, so we'll take a look at Gap next week because I want to see it come to the bottom. Once it hits the bottom and then turns around, that's where I want to jump in and start making money. Right now we're at 22.84. The 23s are going for 64 cents a share. That's about 3% for 1 week. But if you buy the way it looks, I'm not saying this as if it's gospel or anything, but the way it looks, here's your high here. After a 25% increase, it's starting to come back down now. So more than likely tomorrow it might be a little lower. Okay, but I like to see 2 days to the upside, and it doesn't look as if she's getting ready to turn around yet. But we'll keep our eye on the Gap because I like the Gap. I like the numbers. Gap, we looked at that one. I encourage folks to really see what Walgreens owns, not your grandma's store. Andrea, you know what would be really great? If you can like throw a quick little one-page report together, if you're up for it, a quick little one-page report to get it, and I'll make it available to everyone. I'll put it up on here, and we'll go over everything, and we'll give you credit for it. Emerson, weeklies and dividends. Bandit, you're absolutely right. I love Emerson. As a matter of fact, Emerson Electric, EMR, is a dividend king. That means they have been in business since the 1880s. Okay, I bet you didn't know that. I think it was 1887 or 1888, I think. Okay, but they've been in business for over 100 years. They've consistently increased their dividends for more than 5 decades. So yeah, EMR is on my list. But let's see what the numbers look like. Because the companies, when they get over 100 years old, they really don't have to give great premiums. Okay, which we've seen with Johnson & Johnson and Coca-Cola and Pepsi. The premiums aren't always over 1%. Now, here's our high at 120, our bottom at 80, at 83. A year ago, 97. Right now, we're at 104. Okay, there's your numbers. Last 30 days. Okay, take a look at the last 30 days. Here we are. 118.20, something like that. Drops down to 100. It's an $18 drop. $18 drop. And we're just kind of like up and sideways. 104. I actually like that. It's not that bad. 104. But what is the 106? No, the 104s are going for 130. The 105s are going for 80. The 106 is no. Look at the last price. The last price is 104. So if you're going by the last price, you're looking at about 80 cents a share. Okay, and yeah, you really have to take a look at the numbers. Okay, Mark, we already looked at Pfizer. AAL, American Airlines. Holy shit, still got 100 questions to go. Alright, we have to go through these a lot quicker. Alright, American Airlines. High, low, was, is. Alright, 1039 at the moment. The 1040s, the 1050s. Ooh, nice. 1.5%. Cool. Well, let's take a quick gander. The last 30 days for American Airlines. Okay, check it out. 30 days ago, $10.60 jumped up to 11. Dropped down to $9.10. Okay, now we're at 1039. Okay, went up, pulled back, going up again. She's in an upward trend. The high's way up here, which means she could continue to keep going up. Could. Doesn't guarantee it. Let's look at seasonality. What does it normally do this time of year? Well, normally, this time of year, okay, that's pretty clear. Well, from where we are right now, the next couple of weeks, she's going up to the upside. Very slight. I like very slight to the upside. Okay, and at 1050, okay, it's going for 16 cents a share. 16 cents a share on a $10.40 stock. Well, that's a nice little premium. Okay, so AAL, I like that one. All right. Next on the list, James, can you use OTC? Pfizer we looked at, ET we looked at. Uh-oh, I missed all these freaking questions. Gap, blah, 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 DO, 3M. Mexi, 3M. Let's take a quick look at 3M. All right, 3M really quickly is going to be a no for this week. It's actually at the high of the year. I don't buy at the high of the year. Sorry about that, Mexi. ACMR, really, dude? ACMR, ACMR. Did you even look at this one? ACMR. Okay. CA all day. ACMR. There are no dividends in the selected time frame. You know what that means? That means it's a no. Green tomorrow, Jamal. I have no idea what that means. TQQ, not bad. What the hell is TQQQ? TQQQ. Yeah, so TQQQ is going to be a no, and the reason why I know for TQQQ, Eric, 2014, no dividends. 2015, no dividends. 2018, 1 cent. Okay, 2018, 19, 20. Yeah, dude, that's not like 5 or 6 years of dividends. That's a big fat no. So, how does it work, this covered call thing? NCB, how does it work? Simple. You buy a stock, you buy 100 shares of any company you want, as long as it has options, and then you can sell somebody the rights to buy it from you for the same price you paid for it and collect the premium. The premium that I like to collect is 1% or higher. If I do that every single week, I collect 1% every single week. Simply, safely, predictably, consistently. 1% a week, that's over 50% a year. It's not going to come easy. It's not going to come cheap. You got to spend at least 10 or 15 minutes a day. Terribly sorry to interrupt your schedule. 10 to 15 minutes a day to a 50% return. Okay, I have no idea what your account size is at the moment, but my account size at this moment in time, I like 1% per week. It's a nice fat premium for me at the end of the year. Okay, now it wasn't always that way. When I first started, it was, it was very small amounts, but those small amounts continuously grow. Okay, now you may not think 50% a year is a lot, but it adds up quickly. Flipper, if I sell a covered call and it bombs $15 per share, how do I make that 1%? All right, Flipper, who are we looking at? Martial Law 4. I've seen you here before. I remember that name. All right, Flipper, let's take a gander. Now, let's take a look at Win, because I've had Win for 4 months. WYNN. Okay. So, you want to know, all right? I originally bought Win 5/7, which was May 7th. Okay? 7th of May. I bought it at 98. I sold at 98. I collected over 2%. That was the first trade on Win. So the second trade on Wynn was 121, over 1%. The third one, over 1%. The fourth one, big drop, 15 cents, 57, 27, 47, 33, 19, 35, 56, 67, 42, 122, 19, 16, and 37. Add them all up. This is what I bring in every single week from my 400 shares of Wynn. Now, when the stock goes down, look at it this way. You're, you're investing in the stock market. What do stocks do? Stocks go up, stocks go down. You're going to buy something, it's going down. You're going to buy something, it's going up. That's all it's going to do. So, if you buy a decent stock, okay, if you buy a decent stock and have your mindset, I'm buying this company and I'm holding on to it for the long term, all right, you're going to get an increasing dividend every single year. What are you also getting? Every single week, you're getting a premium. Well, on ACMR this week at 18, I'm getting 45 cents, which is almost 3% for this week. So what happens when the stock drops? Well, more than likely, I'm not getting 3% next week, probably the week after either. But I will be bringing in something, okay? So if she drops, well, I will sell another covered call against it. Not the exact same amount of money, but far enough out. So I may not get 1% every week. I'll give you my cow analogy. Now, I'm pretty sure, Flippy, you heard it before. But if I buy a cow and the cow gives me a gallon of milk every single week, great, I'm happy. All right? Or how about the goose? Goose that lays a golden egg. Let's say she lays a dozen eggs every week. Great, wonderful. What happens if she only lays 6 eggs? Am I getting rid of it? No. What happens if my cow stops giving me a gallon of milk? Do I get rid of it? No. I just hold on to it until it hits my target. And I keep doing it every single week, after week, after week, after week. It's just like buying any other stock that you're going to hold on to for the long term. Then you buy it and you keep selling covered calls against it until it hits your target. But in the meantime, you're getting higher and higher dividends. Does it happen all the time? Buy on Monday, get rid of it on Friday? No, it doesn't. Matter of fact, so far this week, what are we looking at? Okay, Albemarle and VFC is in the money. Those ones are going bye-bye. Okay, that's only 2 out of 6. Okay, this account here, 1 out of 7 is going away. Account number 3, 1 out of 7. Okay, so I'm only going on 4 stocks out of about 20. That's it. Okay, but every single week I'm making over 1%. Okay, because Kohl's, MPW, Walgreens, and Wing are always giving me over 1%. Let's get back to here. Next on the list, alerts in low volatility environments gets blown up when there's high volatility. Nick, I have no idea what you're talking about, but okay. Bandit, Colgate-Palmolive, CL. Another dividend king. Okay, been in business. Oh, wow, that's going to be a quick no. Look at it. There's the high of the year. Okay, I don't like buying at the high of the year, but we will take a look at it in again in 2 weeks to see what it's doing. CL. Okay, now 2 weeks, because I want to see this thing come back down again. See, she went up 104, pulled back to 100. Now she's shooting up. Eventually, she's going to drop back down again. All right, don't they make toothpaste? Colton, PSEC. PSEC's a no. We looked at that one before. Hormel. Hormel gives absolutely horrible premiums, but they are a dividend king, and they have increased for over 50 years. But look at the numbers, 32.42 to 32.50. Holy shit, actually paying decent this week. This week it's over 2%. Cool beans. If you like Hormel, well, let's take a look at Hormel. Okay, the high was last year at 40 bucks. The low is right there, 28.50. She shoots up to 37, pulls back. Now we're sitting at 32.19. What's the last 30 days look like? Okay, the last 30 days is not giving me a good idea of where it's going. 30 days ago, 32, 33.20. Bottom's at 31.20. That's only $2 drop. That's not a lot. Up, down, up. Here's where we are now. No clear direction. Okay, it's not bad, but no clear direction. All right, user 65, 69, 14, 48. Yeah, I already looked at ET. James, I will put a one page for the group. Thank you, Andrea. Cool beans. Thank you, because I literally cried every day. Oh, Jerry. No, A-L-A-L-L. All right, SMCI. No, we looked at that one. No dividends. It's going to be a no. Andrea, American Airlines does not pay dividends. Delta, Alaska, and United pay dividends. Okay. Uh-oh, I missed a bunch of questions. Green Day tomorrow, AMCI. Who are we looking at? Blah, blah, P. Sexton, no. James, blah, 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 blah. LAC. What the heck is LAC? LAC. Lithium Almers Corporation. No, no, and no. When I say 20 years of increased dividends and weekly options, can you play a song by Oda Terry? Sorry, I can't. I have no idea who they are. SPG. All right, American Airlines doesn't pay dividends. Okay, he likes American Airlines even though they don't pay dividends. Well. You'll find there are some companies that do bypass some of the rules. Okay, American Airlines only if they really look good. I mean, really look good. Andrew, if in a down stock and had to start selling lower strikes, the stock suddenly moves up fast, what is the best way to get out gracefully? Andrew, excellent question. The best, safest, and easiest way to get out is pay the fiddler. Now, I'm sure you don't know what that means, but let's see if it's here. There it is, right there. All right. Take a quick look at Target here for a second. This is for you, Mr. Andrew. You ready for this? See, here we're looking at Target. Okay? Here's your high, here's your low, here's where it was, here's where it is. All right, now, I actually had 1,000 shares of Target right here. See where the price is right now? 111. Now, I sold the 112s right here. A little bit out of the money, got a nice premium. Okay, the stock was down. I happened to own the stock at 135. Okay, so at 135, I own the stock, and here it is down at 110, and I'm selling the 112s. I'm getting a nice, decent sized premium. What happens the very next day? This is what you call a black swan event. Andrew, you ready? Okay, so at the 110, 112 area, I sold the 112s. I believe I got 50 cents a share, which was a decent sized premium at that moment in time. Very next day, overnight, didn't see it coming. That's why they call it a black swan. It goes from 111 up to 126, and it kept going to 135. So that option that I sold for 50 cents is now worth, I think it was 12, 13, 14, 15 bucks. I had to buy it back, and I lost $12,000 overnight. I had to buy it back because I owned the shares at 135. If I didn't buy them back and basically flushed that $12,000 down the toilet, I would have lost $25,000. So there was my choice. I lose $25,000 or I lose $12,000. It was no in between. It's not of, hey, can I make payments to you? Nope, it doesn't work that way. Hey, can I owe it to you? Nope, it doesn't work that way either. You dance to the music, you got to pay the fiddler. Okay, so I own Target at 135. She drops down to a bottom at 102. I still own it. I'm still selling covered calls every week, still collecting premiums. I did that for 6 months before she finally came back up over 135. I was able to sell at only a minor loss of my dignity. But on a serious note, if you actually think you're going to get into this game and you're not going to lose once or twice, you might as well pack up and leave now. It ain't going to happen. You're going to buy something, it's going to go to the moon. You're going to buy something, it's going to drop to the floor. No matter what you do, no one can escape it unless your name is Pelosi, and we all know we don't want to do that. I like to think nobody wants to do that because I don't know how the hell that person sleeps at night. Look people straight in the face, lie to them, and steal money from us? Yeah. And then say, well, it's okay for us to do it. Yeah, I don't want to go down that road. So, Andrew, it's going to happen. And gracefully is not going to be in the equation when you buy something and then you have to dish out a lot of cash in order to not lose. Why do you limit to dividend players only? Well, CA, you're absolutely correct. Safety. All right. Now, by the picture I'm looking at, you do not look like you're retired. You do not look like you're in your 60s or 70s. I'm in my 60s. I'm retired. I have X amount of dollars to play with. That's all I got. Okay. My parents are still alive. They didn't leave me anything. They're still alive, so I didn't inherit anything. Okay. I have my children. I help my children buy houses. Okay. And my daughter, I said, house or wedding. You ain't getting both. Okay. So at that point, I do not have enough money to put money into a stock and just let it sit for years and wait for it to go up. Sorry, everything I do has to generate an income. All right, now this trading strategy, it's safe, it's predictable, it's simple, it's consistent. 1% per week is what I'm looking for. Now, I've been trading for over 20 years. I've been using this particular strategy for 15 because my daughter asked me to do it when she was in 2008. So ever since 2008, it's simple, safe, predictable, consistent. It gets me 50% per year. 50% per year is very nice. So the little bit of money I have gets me 1% per week, and that's able to pay my bills. If you're looking for something other than that, if you're looking for capital appreciation, if you want to buy down here and have it shoot to the moon and go up really quick, you're in the wrong place. That's not what I'm looking for. Okay, I really do not care if the stock goes up. My main concern is how consistently does the company increase its dividends? Because that's a shortcut to how profitability. Because if the company's not profitable, then they stop increasing their dividends. It's actually that simple. Okay, I don't have to look at all the companies. I just want to look at the ones that consistently increase their dividends for 20 years or more. Okay, so CA all day. The reason why, is safety, and it's less time consuming because there's 9,596 stocks available, companies that I can choose from any day. That's a lot to choose from. How do you decide which ones? Well, I go strictly by the calendar. Now the calendar, okay, all these little green dots represent the EX date. That's the last day the stock trades before the dividend is paid. Now the reason why I use these dates is because the stocks have a tendency to increase in value 2 to 3 weeks before the dividend is paid out. So if I'm looking at this week right here, which is the third week of August, got Chevron, UPS, Archer Daniels, Aflac, Target, and Walgreens. Well, right there, those are some decent companies. Okay, I buy one or two of them, get my 1% for the week, I'm good. All right? All right, so let's keep on going. Would you ever open a hedge fund? Well, Harry-O, interesting you say that. If you've been, believe it or not, Harry-O, okay, I am in the middle of creating a hedge fund. I am assembling the I'm assembling a list of potential board members. Okay, so I need certain board members that are on the same wavelength. That's one of the reasons why I'm doing this. I figure within a year of doing this every single day, maybe I'll find a half a dozen or a dozen members that want to be board members to help with the objective of this safe, predictable, consistent 1% per week. Offer it as a fund and get it insured by an insurance company. It's a whole big thing, but yes, it is in the works. Okay, Nick, because he has a misconception about the safety of dividend stocks. Why do you limit it to dividend payers' own safety? Albeit because the non-dividend stocks are tracked. Now, Jerry, I wouldn't say that exactly. What I would say is I like consistency, predictability, and safety. Nick, I'm gonna ignore what you said because he has a misconception about the safety of dividend stocks. I'm not 100% sure what you mean by that because the way it sounds, you make it sound as if dividend stocks aren't safe. Okay, I'm looking at companies that have been in business for over 100 years. Ford, General Motors, Bank of America, Wells Fargo, Home Depot, Lowe's, Kimberly-Clark, Kinder Morgan, AT&T. Anyway, plenty of literature supporting what I said. All right, Nick, I'm not really worried about literature and what you said. Okay, really, honestly, don't care. All right, and I don't understand why some people make it more complicated than it needs to be. All right, so Mr. Nick, I actually put up online every single one of my trades. Now, you're looking at just this year alone. I have these little things, okay, these little green and red things, since 2012. So I've been trading and keeping track of all my trades since 2012. January 8th, 2024, Macy's, Ford, General Motors, Clorox, Lowe's, Ford. Well, I heard of every single one of those companies. I know who they are. Hakuna, how are you today over on Instagram? I know all these companies. Okay, there's not a single company on this list that you never heard of. Every single one of those companies is over 100 years old. So I'm not quite sure where you're having the safety issue with dividend stocks, especially the ones that I'm looking at. So you can make 1% if holding it to hit its target. May take months to hit a target. That's true. Okay, this year I've held 3M for 11 weeks. I still have Win, hasn't hit my target yet. SPG, what the heck is SPG? Let's go back. SPG, spaghetti. Yeah, that's going to be a no. Sorry, SPG's a no. What do you do when the drop in share price is greater than the premium you receive? All right, Nick, apparently you're missing rule number one. Rule number one is never buy a stock you do not want to hold on to long term. Most people buy stocks to hold for decades. So if I'm going in to buy a stock as if I'm going to hold it for decades, why do I care if it drops in price? Because you cannot show me a single stock that has a year of going from zero all the way up to top without any pullback at all. Stocks go up, stocks go down, stocks go up, stocks go down. The idea that I'm looking at is find good quality stocks that have historical performance behind them. Buy them when they're at their bottom. Okay, this is SPG. Okay, so up, down, 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 up, down. If you find a decent stock, okay, I've got about 300 of them. Every single week, I look at them as they pop up on the calendar. Okay, I don't look at 300 stocks all week long. Okay, so this week, Hypothetically, I would be looking at Chevron, UPS, Archer Daniels, Aflac, Target, and Walgreens. That's it, 6. All right? That's on this list. I have other lists. So between 1 and 20 stocks I look at on a weekly basis. And that's it, as they pop up on the calendar. Go look at this week here. It's kind of full. Apple, ConocoPhillips, PPG, US Steel, Clorox, Kroger, ExxonMobil, Emerson Electric, Hershey's, RTX, and Walmart. I've heard of all of those except for RTX. I have no idea what RTX does, but I believe it's on Warren Buffett's list. That's why it's here. All right, Colton, you want to look at O? O is going to be a no. I can either tell you that now, you can take my word for it, or I can pull it up and I can show you why O is horrible. BHRB. All right, so hopefully, Nick, that answers your question. You know, stocks go up, stocks go down. If you think you're going to buy a stock and it's not going to go down, you shouldn't be playing this game. Okay? That's all they do. Look, went up, it went down. Went up, it went down. It went up, it went down. This is just 1 year. This is, have no idea what it looked like last year, the year before, the year before. How do I know that 165 is the highest it's ever been? I don't. Do I really care? No, I only care about the next 3 or 4 days. Because I like to buy on a Monday and be out on a Friday. And I like to take a look at seasonality. How does it normally react throughout the year? Well, at this time of the year, that's pretty blatant. I mean, look at it. Look at the red line. January, February, she goes sideways. March, she drops. April, she goes up. Then she drops down in May. She shoots up until August, the beginning of August, drops down, goes sideways, drops down. Here's another low here in October. But look from October to the middle of November. Then a little bit of pullback, and by the end of the year, she has another spike. That red line is 10 years worth of average movement. Gives me an idea of what to expect. Now, is it guaranteed? No. But SPG, whatever they do it on a consistent basis. So if they're doing it on a consistent basis, it's going to be going sideways for the next week or so. So let's take a quick look. Right here, pull it sideways. All right, here's the next couple of weeks. All right, she's going to go sideways for a little bit, pull up, pull back down, go back up again, just kind of like almost going sideways for the next few weeks. Well, I like to look at that because I like to jump in, get my 1% and jump back out again on good quality stocks. If I like it and I'm stuck with it, fine, I'll continue writing covered calls every week, week after week after week after week, and continue the income coming in. So most people just buy a stock and hold on to it for decades, and they collect 4 dividends a year, once every 90 days. Well, I'm basically doing the exact same thing. I'm looking at good quality stock, okay? I'm collecting the premium, and if it hits my target, great, I got my 1%. If it doesn't hit my target, great. Well, I'll do it again the next week. If it doesn't hit my target, great, I will collect the dividend. Then I'll collect premium, 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 dividend, premium, premium, premium. And I just keep doing it over and over and over again until it hits my target. Okay, I'm not buying a stock to sell it at a loss. It just doesn't work for me. If I like the company, I will buy it. If it goes down, oh well. I will hold on to it until it recovers. But while I'm holding on to it, I will continuously write covered calls against it. Acuna, and I'm not trying to resuscitate the TV. I got another TV sitting right there. I just haven't got a chance to put it to replace it. I'll get to it. It's one of those things. I'm enjoying the retirement life. I'm enjoying. I actually sat and watched TV for like 4 or 5 hours today. Just sat there and chilled. It was so nice. Went outside, played with my plants. I'm making a door for my mother's house. Rather than buying a door, I'm making one because I need something to do. All right, because this, what am I on? An hour or 2 in the morning, and then 2.5 hours at night. Other than that, I got nothing to do for the rest of the day. Okay, so let's keep on going. SDVA. Hey, what the heck is SDVA? Does anybody know what SDVA is? SDVA. Cannot find that symbol. Well, you know what? If they can't find the symbol, it's going to be no. SPG. Uh-oh, Nick, that's not nice. Well, so you can make 1%. Yep, Nick. Yep, we already talked about that one. SPG, BPR, oh, nope. SVDA, nope. SDVA. SVDA. Yep, can't find that one. That's a no. The kids on Yahoo Finance are saying a bunch of nasty stuff about Walgreens. Okay, fine. What's a good monthly paying stock? Colton, I don't look at monthlies. I look at weeklies. All right. I'm following the rules, Bandit. I have no idea what rules those are. Because the funny thing is, all right, funny thing is, you can be following the rules under a dictator giving you the wrong rules to follow, depending on where you want to get. Okay, you have to ask yourself sometimes, what are the rules? Do they make sense? Do they align with what I want to do in my life? Okay, I played by the rules all this, for my whole life, and here I am, 60 years old. I don't have enough money to retire the normal way. No, I got to do it myself. Elmer's Glue. Oh boy, never even heard of Elmer's Glue. Mel. Alright, Andrea. Mel does not have any options. IRM. What the heck is IRM? Iron Mountain. Cool. Iron Mountain's a no. Bandit. Target was earning, I thought. Do you check when the earnings are? Target. Now, Target is yet again another dividend king. But Target is susceptible to black swans. They had 5 black swans last year. Okay? So you got to be leery on some companies that have tendencies to do that. How do you feel when a stock skyrockets past your strike and you only make 1%? CMG, how are you this evening? 5 in the morning here. I just woke up an hour ago. Wow. Alrighty, Acuna. CMG, you know what? I have a target, and it's a weekly target. And you know how many times a month I see something shoot past my target and someone else is making money? You know what I have to say about that? Well, good for them. There's a reason for that. I like safety, predictability, consistency, and simplicity. All right? If you take your eye off your target and you get distracted, that's when you start losing. Me, I like simple, safe, predictable, and consistent. If I can make 1% per week, that's all my target is. I do not have the time, desire. I don't have the time nor the desire to buy something at 153 and wait for it to go to 170 or 180. Because as you see, stocks go down, stocks go up, they come down, they go up, they come down, they go up, they come down, they go up. Okay, last year she was at 120. Now she's at 150. That's a $30 increase. Okay? 120 last year, 150 this year. That's a $30 increase. Now, if I take that same $100 and I invest it every single week and I make 50%, well, now my 100 is at 150, which, okay, 130 to 150, which is a 50% return. This only has a return of 30%, $30. Not the same. Andrea, for board member. Well, Andrea, if you're serious, there's a little bit more to becoming a board member of a hedge fund than just, being asked to be a hedge fund board member. CMG, how do you feel when the stock skyrockets? We already talked about that. But how much money are you putting in for that 1%? All right, Fresh Casito. I show this to everyone every week. All right, here we go, way up here. All right, who asked the question? All right, Fresh Casita. Here are the 3 accounts that I share with you guys. There's 142 in this account. That is currently up 46%. There's 100,000 in this account. It's currently up 69%. There's 100,000 in this account. It's currently up 9.5%, but it's only been a month and a half. Okay, a month and a half, it's already up 9.5%. Now, when you ask what 1% is, well, what is 1% of 142,000? Well, that's $1,400 a week. What is 1% of 100,000? Well, that's $1,000 a week. What is 1% of 100,000? Well, that's $1,000 a week. You got 3 accounts right there. 1, 2, 3. Okay, you do the math. Now I have 6 different accounts. I only shared 3 of them with you guys. Let's go back to where we were. Hopefully that answers your question. So if you have a $50,000 account, 1% per week should be about $500. $20,000 account, 1% per week should be about $200. Okay, you just take the decimal point and you move it over 2 places. It's actually that easy. All right, earnings can dramatically affect stock price. Should we avoid earnings dates? Well, Charles, I have seen positive earnings where stocks went down, and I've seen negative earnings where stocks go up. I really don't pay that much attention to earnings. However, those are earnings from the past. The recent earnings nowadays, when they miss, the market maker just drops the price. But I like it when the market maker drops the price. Because when the market maker drops the price, that's when I want to jump in. Because you see, when it goes down a whole bunch, okay, earnings can dramatically affect stock price. I like buying at lows. Nick, yet they would check every one of your boxes. Nick, I have no idea what we're talking about. Now, Nick, you got to remember, I got Facebook here, Instagram here, TikTok here, YouTube here, another TikTok here, and another YouTube down here. So I have so many questions coming and going all the time. When you're answering a question, or you're having another half of a question or half of a statement, I can't see all the statements that you make at once. So what you're saying is not making any sense because I'm only seeing half of it. Yet they would check every one of your boxes. I have no idea what that means. Even if I go backwards. And what about INTC? Dividend cut, share price drops 30%. Well, let's take a look at Intel. INTC. All right, so let's take a gander. Here's the high, here's the low, here's where it was, here's where it is, here's the direction it's going. It's at $20.13. The current price is $20.24. If I buy it at 20 and I sell the 20.50s, I'm getting 36 cents. Well, at this moment in time, let's pretend I don't have any. If I want to buy it, I'm going to be buying it for this price tomorrow morning. And if I sell the 20.50s, well, I'm getting 36 cents a share, which is over 1%. But here's the thing. I just so happen to have some Intel. Not there. Right here. Okay, so let's put an Intel, INTC. Okay. Now, here's the high. There's the high right here, 37. Comes down to 30, and then she drops. And here's our bottom down here, just below 20. We're sitting at 20.13. All right, so where did I jump into Intel? All right, as you can plainly see, I jumped into Intel at $20.99. All right, so I sold the 21s. I got 22 cents a share. That's over 1%. Right? Now, it's a lot lower than when I paid for it. I bought it at 22 and it's currently at 20. So what does next week's look like? Well, because it doesn't look like it's going to hit the 21 that I sold. Okay, so I'm going to keep that premium and I'm going to take this Intel into next week. And what is Intel paying me next week? Well, at this moment in time, the 21s are going for 20 to 22. That's right about 1%. What I'm looking for. Okay? The 2150s are going for 11%. I don't really want that because I'm into it at 21. See, my actual purchase price is $20.99. The 21 is going for 20 cents to 22. So I'll probably get my 1% next week for Intel, even though it's down. Okay, now if it drops even lower, I've only got 14,000 into this one. I'll go as high as 50,000. So I'll dollar cost average 2 more times before I think I'm getting rid of it. But it's at 2013 at the moment. So depending on where it is tomorrow, Friday, at 4 o'clock, at 3:30, because remember on Friday I got a morning trading group. We jump on Monday, Tuesday, Wednesday, Thursday at 9 a.m. and we stay on to 10, 11 until you guys are all done with your questions. Friday afternoon, options expire. So the option that I sold here, 30 August, okay, it expires tomorrow at 4 o'clock. So tomorrow at 4 o'clock, let's take a look at, where are we? Here's this week's. Okay. Here we are right here, the 21s. Right now, I sold them for 22 cents a share. Now they're worth 4 cents a share. So I could buy those shares back, those options back, and then sell the call strike, and then sell the stock, and then still be up on it. It's always, always, always going to be about the numbers. Okay, so Nick, this is Intel. We're talking about this one. So when Intel made this drop, yep, I waited for the bottom. I waited for it to turn 2 days, and then I jumped in on it, and now I own it at $20.99. Okay? So let's get back to where we were. IRM, we already did IRM, we just did Intel Nick. And what do you do when the company you hold forever never returns to the price you bought it at? Well, Nick, I've been doing this for 20 years. I haven't had that situation come by yet. Oh, wait a minute. Yes, I did. Because I remember, what was that bank that went out of business in California? They made a huge drop. When they made that huge drop, I jumped in, bought a bunch, made some returns on it. Then they went bankrupt, and I lost what was left. Fascinating football videos. How are you? Can we look at 40? What the hell is 40? Now, if you get that kind of reaction from me, what do you think that answer is going to be? F-O-R-T-Y. 40. Yeah, that's a hell no. Okay. Maria Law 4, how are you doing this evening? Now, Maria, I'm going to ask you a serious question. What the hell were you thinking when you bought this? Seriously, look at it. Number one, has no options. Number two, look at the chart. It's all over the place. Okay? And the current price, 115. Look at this. The bid, 38. The ask, 115. Last price was 76. That's just a mess. Okay? Now, there's over 9,596 companies. Why the hell would you pick this one? That one makes no sense to me whatsoever. Anyway, let's keep on going. Boomba, how are you today? What did Boomba have to say? What if it goes down and the premium at the same time strike is almost nothing? Well, welcome to stock trading. Dude, if you're worried about a stock going down, don't get into this game. Because that's all they do. They go up, they go down. I can't take a look at this one anymore. MSFT. See, that has rhyme and reason to it. Look at it. It has rhyme and reason. That other one, 40, made no rhyme or reason whatsoever. Okay, user 6569. You've asked me about IRM 5 or 6 times. I said no already. I don't know why it is IRM. Okay. I don't know why it is you don't understand when I say it's at the high of the year. That means no. Okay? You've asked 4 or 5 times. IRM is no for this week. And it's no because it's a monthly optional stock. I don't like monthlies. The numbers just don't work. Can I please explain the process? Okay. Poo-pee, pee-pee hands. Poo-poo, poo-poo, pee-pee hands. Okay, anyway. You've been here long enough, you know how the process works. You buy a good quality company. You sell the rights to someone else that you just bought. So if I'm looking at IBM, okay, if I'm looking at IBM at 198, okay, the 199s, 200s go for 141. If I like IBM, I'm going to buy it at this price. Okay? If I buy it at this price, I want to know what my profit is going to be beforehand. So I want to do what's called a covered call. So I'm buying it at 199.40. I'm going to sell it at 200, collect 141. Okay, the $1.41 per share. Okay, granted it's not 1%, but it's a nice size premium on IBM. IBM's a company known around the world. Pick a good quality company, okay? Buy it at the market price, okay, $199. Sell somebody the rights to buy it from you for the exact same price, $200, closest strike price, $200. Collect the premium. If it goes above $200 by Friday, I'll be back into cash on Monday. If not, I keep this money, and then next week I do it again. Next week I do it again. Next week I do it again. And I keep doing it until it hits the 200 mark that I want. Okay, now the chart will usually tell me when it's going to go there. At this moment in time, IBM is going to be a big fat no because it's at the high of the year. All right, I do not buy at the high of the year. Okay, it's like standing on a ladder waiting for someone to bring you a taller ladder. If IBM was worth more than $200, it would have been more than $200. At this moment in time, it's not. It's worth $198. What is the buy rate for tomorrow or Monday? QCOM, Badfish. QCOM. I like QCOM. QCOM's on my list. Okay, look at the numbers. Okay, here's the high, here's the low, here's where it was, here's where it is, here's the direction it's going. Those are the 5 things I want to see right up front. Okay, what am I buying it for? 170.40. Well, the 170 is going for 310. 310 is almost 2% for 1 week. I like 2% for 1 week. So the question is, do I like Qualcomm at this current price? Well, let's take a look at seasonality, see what this thing normally does. Okay, normally, QCOM just goes sideways. Look at it. Almost perfectly sideways. And then the last week of October, 1st of November, nice little bump up for the first 2 weeks of November. That would get my interest. Okay? But at this moment in time, what is it doing? All right, well, here's your high right here. The high was in the middle of June at 230. She drops right here on the 5th of August. Okay, comes up, and now it's just going sideways at 169.49. Do I like it at this price? And this is what they're paying me. So, always goes back to rule number 1. Never buy something you do not understand or you do not want to hold on to. Always go into buying a stock as if you're going to buy it and hold it for a long period of time. Okay, with that being said, if it hits my target within the first week or 2 or 3, well, great. I'm getting 1% per week. That's better than holding on to it for years, because 1% a week is over 50% per year. Touchy. How does the holiday on Monday affect my strategy? Well, simply put, I'm taking the day off. That's what that means. Taking the day off. So I'll be buying all my stuff on Tuesday morning rather than Monday. Dowie Van Verwelt. How do you make another account? Oh, how much is your course? I don't have a course yet. I probably should. Have you ever done a credit spread? All the time. I love credit spreads. What should be the initial investment for a new stock profile? Mr. Ponce, I can't tell you that because I have no idea who you are. I have no idea about anything about you. What are your risk factors? What are your goals? What's your time frame? All that kind of nice, neat, fun stuff. Now, I started an account 20 years ago with $12,000. My grandson started his account with $50. Okay, I have people that started their accounts with 5,000. Some that start with 10,000, 12,000. Some people start with 100, 200, 300,000. Everyone is different. Everyone has different goals. My suggestion, always, 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 if you're new and you don't know what you're doing, download Thinkorswim. I don't make any money with you downloading it. Seriously, I don't. Download Thinkorswim. Open up an account, Charles Schwab. Tell them you want to paper trade for a while. And then just paper trade. It's like playing Monopoly. Okay, you're using a virtual account to test your theories. Test it and test it and test it. The stock market's been around for 400 years. It's not going anywhere. Okay, in the last 100 years, we've seen a lot of shit. We've seen the changing of the currency for the United States. Now, I don't think anybody's going to remember that, okay? But we had silver certificates back in the early days, okay? I remember in the 60s and 70s, silver certificates would still pop up, okay? And then they went and they moved away, and then, we're actually current valuation of the dollar that we're at now. Maybe they're going to get rid of it and put something else in. But you know what they're not going to get rid of? They're not going to get rid of companies like Coca-Cola, Ford, General Motors, IBM, General Electric, Consolidated Edison. Okay? These companies have been around for over 100 years. They've seen a lot of shit. They've seen World War I, World War II, Vietnam, Korea. They've seen the stock market crash. They've seen the Great Depression, the oil embargo of the 70s, the dot-com bust of the early 2000s. Okay, the what do you call it? The financial crisis of 08, the pandemic in 21. They've seen all that shit, yet they're still increasing their dividends. Yet we still need toilet paper. We'll still need toothbrushes. We'll still need paper towels. We're still going to need shampoo. We're still going to need all that shit that these companies make. I don't see them going anywhere. All right, what should be the initial value? I can't tell you that one. Charlo! If your grandson's 50 keeps doubling every 16 months, here's the thing. When you have small amounts, okay, it's more challenging to get up to that consistency. Because at $50, what is he buying? $10 of this company, $10 of that company. What does he make? Okay, 10 cents, 20 cents, 30 cents a week. He's 4 years old. So by the time he's 16, 17, 18, he'll have a couple $100,000. Okay, now, me and the other grandparents, okay, and the mom and dad, if we all take our change and throw it in there, what is it, $2 or $3 a week for each of us? So he gets $5 or $6 a week. He's 4 years old. Okay, by the time he's in high school, he should have a nice set of money. No 140 from your reaction. Oh, I see that. Ooh, excuse me. I didn't buy it, just couldn't. Uh-oh. Why do you buy close to the strike price? It's almost like the option will get triggered. All right, Charles. Now, when I say it's very important to read the orders out loud, because if you hit a wrong button or you say the wrong word, you're in a wrong position and you're highly susceptible of losing. By reading your statement right here, why do I buy close to the strike price? I don't buy, I sell. All right, so if I'm buying the stock, I buy the stock at the current price, 170.40. I then turn around and sell the covered call at the closest strike price. So right now, the 170.40, the closest one is going to be the 170, and it's going for 310. You got to get the terminology properly, because if you say you're buying it, well, you're buying it. No, you don't want to buy it. You want to sell it. 80% of all options expire worthless. So I want to be on the selling side. Okay, if I buy QCOM at the current price, first thing in the morning, and then I sell the closest strike price, and that 170.40 is going to be 170. That's the closest one, and it's paying $3.10. Yeah, I'm going to make a little over 2% on that trade, but you got to get the terminology right. I don't buy options, I sell options. All right, and I'm looking for it to get triggered. Okay, I'm looking for it to go above 170 and to be back into cash on Monday. Because I'm not looking for capital appreciation. I'm not looking to buy it here and have it go up. I could honestly care less about the stock. My main concern is the consistency of increased dividends. That's concern number one. Concern number two is, are they paying me 1%? Great. If they're paying me 1%, okay, and everything's looking right, is now the right time to buy? Well, here's a 30-day high, here's the 30-day bottom, she's shooting up, leveling off, maybe, maybe not. Well, she's coming down a little bit. Maybe, maybe not. Depends on how I feel about the company. If I really like QCOM and I want to take that chance, then why not? But for me, at this moment in time, I'm going to say no to QCOM because it's too close to the high, and I have 2 down days in a row. So no to QCOM for this week. NWL brands, please. Can we look? Andrea. Okay, what the hell is SDIV? Now, usually, wait, James, how does someone call you? When do we post out contact info? Okay, Andrea, you can contact me right here. Okay, now you've been chatting here for a while. I have a nice conversation with you. DM me your phone number. I will give you a buzz. It's actually that simple. Okay, SDIV. I have no idea who they are. SDIV. And usually, before I even hit this button, usually when I say I have no idea who the hell they are, usually that means no. SDIV. Monthly optional stock. Okay, that's a no. Sorry, I don't do monthlies. They just don't pay the same. Andrea, NWL. NWL. Let's see what we got. Oh, come on, Andrea. You've been here long enough. You know monthlies just don't pay. Okay, $7.24 to $7.30. The seven's going for 35 cents. You're losing 30 right at the top. You're walking with 5 cents on a $7 stock. No, the numbers don't work. And then you have to hold it for 3 weeks. So you're getting 5 cents for a share of a $7 stock, which is less than 1%. And then you have to divide it by 3, because you got to hold it for 3 weeks. And then here's where we are now. Okay, we're here now. Where is it going to be in 3 weeks? I don't like monthlies. Okay, I have to figure out where they're going to be in 3 or 4 weeks. Well, that's challenging enough to figure out where it's going to be in 5 days. Now you're asking me where it's going to be in a month? Sorry, it's a little bit harder. I'm paper trading right now on Thinkorswim. Mario Law, well, you should give me a buzz and we should chat. I want to see how you're doing. Darby, why don't you keep doing credit spreads? All right, Darbinley. Okay. The reason why I don't do credit spreads, now I love credit spreads, really do, and I like debit spreads too. Now, you're going to find when you do credit spreads and debit spreads, you're going to win 2 out of 3, right? Maybe you win 4 out of 5. But for every one you lose, you have to win 3 times. Okay, so if I do 5 trades and 2 of them are losers, those 3 do not offset the 2 losses. Okay, you have to look at the numbers. Now, I love debit spreads and credit spreads, I really do. But if you're not right enough, and the profit margins aren't enough, and with credit spreads and debit spreads, both options expire. Okay, a covered call, the stock never expires. So if I buy NWL, okay, for $7.30, I can write a covered call every single month. And it'll never expire. Okay, options always expire. So a credit spread, debit spread, yeah, they're going to expire. How do you paper trade on Thinkorswim? All right, Charles, when you log in, okay, When you log in to Thinkorswim, this is the first thing you're going to see. Okay, hold on, it should pop up any second. Right, there it is. Okay, that's the first thing you see right there. Thinkorswim installing updates. Okay, and as soon as the updates are installed, down at the bottom, it's going to say live trading, and then it's going to say paper trading over here. Okay, live trading on the left, paper trading on the right. You click on that, fill in all your information. Let's get out of there. All right, let's keep on going. Bad fish. How much fake money have you lost? You know, bad fish, if you think about it, if you're going to lose money, that's the place to lose it. You always pay for it. It's like when you play Monopoly. You keep playing and playing and playing until you understand the game. So that way when you're playing for real, you know what the game is, and you know what the rules are, and you know where you're going to win and where you're going to lose. Holy shit, it's past 11:30. I'm just keep trotting along. All right, I'm going to go through the last of the questions. We'll go from there. Charles, when you open up an account with Charles Schwab for Thinkorswim, you can pick paper. Okay, we just said that one. All right, Chica. Yeah, I don't do spiders. The numbers just don't work out right. I have a Charles Schwab account and download Thinkorswim. What's the next step? Can you explain rolling strategy? Oh, John, sure, why not? Okay. Let's take a quick look at Albemarle. A-L-B. Okay, so Albemarle, high is 201, bottom is 71. Okay, so here's your last 30 days. Way high over there. Here's your bottom here. Here's where we are now, 91.65. Now, I jumped in at Albemarle at 90.78. I sold the 91s. I got $2.12 a share. That is over 2%. Okay, and that's a nice trade, 2% on Albemarle. Now, if I want to roll this forward, basically I right click on that. All right, see what pops up? Add to position, create closing order, analyze closing trade, create a rolling order. So if I hit create a rolling order, okay, what is it going to do? Is going to create a rolling order, and I just click on that and get rid of this. And here's the rolling order. What is the rolling order? Well, I am buying back, okay? I am buying back the 30 August 24 91s, which expire tomorrow. I'm buying those back, and I am selling next Friday's 91, and I'm collecting $1.54. Now, that $1.54 is more than 1%, even if I have to buy back the one that's expiring tomorrow. So if I hit confirm and send, here's the trade. Before I put it on, read it out loud. Okay, I'm going to sell 5 calendars ALB 100s, those are the weeklies, 6 September 24, 30 August 24. It means I'm selling this one, I'm buying back this one. And here's the order right here, for $1.54 limit order to open to close. So I'm opening one order and I'm closing another. Okay, and I'm collecting $1.54 per share. All right, so I'm just going to send that off. If she fills tomorrow, great. If she don't, not a big deal. All right, but here's the thing. I'm looking for a safe, simple, predictable, consistent 1% per week. The trading strategy I came up with was created for a 9-year-old little girl. Now, when my daughter was 9, let's see if we can take a look at her and her loveliness. I don't even know if the speaker's working. All right, videos. Look at the oldest. Here's the little princess here.
Hi, I'm Tracy, and as you being part of my internet website company, which my dad doesn't like calling that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
Seriously. I laugh every time I see that. Now, the reason why I laugh every time I see that, because I think it's funny as hell. All right? This was 12 years ago. My daughter was 11 at the time. Okay, so she'd been trading for 2 years, and we've been doing this together. And it was kind of a bonding experience between me and my daughter. It was great. It was nice. It was something that her and I did together. So, I had a lot more hair back then, and believe it or not, I still have this t-shirt. I do. It has a lot more holes in it nowadays, because I remember that shirt was like new that day when I got that. And, now, what is it, 15 years later, it's got a bunch of holes in it. It might be time to get rid of it. But anyway, it was created for my daughter. Okay? Now, at 9 years old, here she is when she's 11. At 9 years old, it had to be simple. Safe, predictable, consistent, and no way that she could lose. So the trading strategy was simple. Never buy something you do not understand. If you cannot give me a 10 to 15 second elevator pitch as to why you bought it, where you jumped in, where you plan on getting out, and why, then don't do it. Never buy something if you don't want to hold on to it long term. If it hits your target, great. Take the profit. Say, thank you very much. I'll see you again in 90 days. Because every 90 days, these companies pay a dividend. And if the stock goes up just before the dividend, well, why not look at it just before the dividend? Buy it, get your small profit, get out. I look at over 300 companies every quarter. Now, I don't look at them every week. I look at them every quarter, every 13 weeks. Okay, so week number 1 of the first quarter looks the exact same as week number 1 of the fourth quarter. And looks the exact same as week number 1 of the second quarter and the third quarter. They all look the same. This is boring, monotonous, tedious. It is the same thing over and over and over again. Now, you guys throw stocks at me, and I'm always saying, no, 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 no. I've called you but can't reach you. All right, Darbenly, I called you this morning twice, right? I have a spam filter on my phone. So nobody gets through to me unless it's one of my kids, all right? So you put your phone number down. I call you. You either answer the phone or you don't. All right? I have way too many people calling me to answer every phone call. Can't explain the rolling strike. John, we just did that one. Thanks, live, blah, 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 blah. Darbenly, as I can understand this is the safest way to trade. Well, it was created for a 9-year-old. It had to be simple and safe. How do you spread that chart to show the week? Spread what chart? This chart here? Okay, this chart here, wherever you have that mouse, click left click, drag right, or drag left. Whichever side you drag it to, that's going to light up. You let it go, and there you have it. That's about 2 weeks. How long do you need to hold minimum to get interest paid before you sell? Best driver high. Well, hello to you too. How old is she now? She's 25 now. Holy cow, she's taller than me. And she's got a boyfriend. You know how much that hurts? Oh my goodness. Anyway, it's a part of growing up. You gotta let the kids grow up and you gotta leave them alone. Okay? How long do you need to hold? Blah, blah, blah. For all that, blah, blah, blah. Okay, so we seem to have answered all the questions. It is almost midnight. I'm going to turn into a pumpkin. So if you guys are interested, daily trading group in the mornings, Monday, Tuesday, Wednesday, Thursday, 9 a.m. until you guys are done asking questions. If you really want to learn to do it, sign up for the monthly trading class. It's in the mornings. Friday afternoon, it's 3 o'clock just before the market closes so we can make sure we don't lose any money. All right. That being said, I'm going to sign out. You guys have a great day, and we'll see you again tomorrow night. What are your opinions on SMCI? SMCI is going to be a no. Where is the daily morning group? Maria Law 4, how are you today? Well, the trading group is, if you go up to my bio right there, okay, that will bring you to the link to the 10-minute trader. Okay, this might sound familiar. Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern Standard Time. Trading live online. You click on that right there, trading live online, and that will take you to my Patreon. Give it a second. There it is. Dividend Stock Talk with pretty old me right there. Okay, all that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Creator, I cannot tell you what to start out with. What I can do is tell you to start out with a paper trading account. Do not risk your money until you know what it is you're doing. Okay, $100 a month, jump on into the trading group, ask as many questions you need. I will walk you through how to set up your account so it looks like mine, if you like that setup. You've got to figure out what it is that you like, what it is that you want. Okay, my goals are different than yours. My goals is a safe, predictable, consistent 1% per week. And I've been getting that for the last 15 years, and I am okay with that. I'm perfectly fine. If I want to sit in front of the computer and make more money, I can. I choose not to. All right, so you guys have a great day. I am done. Finished. Finished. Oops. Finished. And done. Yep. And all right, so for you guys down here, Dividend Stock Talks, this is James from the 10-Minute Trader, brought to you by all those people that want to increase their rates of return without too much complexity. So you guys have a great day, and we'll talk to you again